Good evening, everyone. Time for this week's silver update. We are open in the Asian market. You can see we're drifting a little bit lower here on the open. Had a little test of the 31.40 level and we bounced back. So that's silver. Gold is drifting lower as well at about 1706. I want to take you out to the long-term silver chart. First of all, the weekly. You get the general view that we're looking at the continuing rolling over situation that's happening with the weekly MACD. The price here, you can see the price is still stabilizing at around the 31, 32 level. We're not following, we're still trying to determine whether we're going to follow kind of a top pattern like we had here and here. So the question is going to be, are we going to come down and just correct to this point and then rally like we did here, or are we going to have a further breakdown and then just make sort of a big top and then rally from this support line? So we're still building and determining which scenario is going to be the case. Now the seasonals, I don't really attach a lot of importance to seasonals because silver is not like a regular commodity that is a crop or something like that. There really are no seasonals, but there are seasonal effects that people point out. If you'll note that in the year 2011, the beginning of the year, we rolled over and tested 25 and then we just took off and doubled from that point on. That actually occurred in the very end of January, late February. So whether that pattern repeats this time remains to be seen, but there definitely is precedent for very strong rally all throughout the spring. That could also be the case this year. Now, I wanted to do kind of a grab bag commentary on a lot of topics that have been in the news recently. So I've kind of made a summary here. But the first topic I wanted to talk about was a topic that I heard on the way home from work on Friday. I sometimes listen to Sean Hannity. I listen to all the talk radio hosts, liberal and conservative. But I was listening to Sean Hannity on the way home, and I was very taken aback by one of the commentators who came on there, a listener who was talking about the bond bubble that is going on, and I was really surprised to hear Sean talk about how he thought that the U.S. was not experiencing a bond bubble. Now you can see this is the more researched chart of the Treasury bond, and this is if not a bubble, it is a bull market that has run since roughly 1981 to the present. And the caller was talking about how bonds were in a bubble, and Sean disagreed and said something to the effect that, well, it's a safe place to put your money, and that's interest rates are so low, I don't see how you could say that's a bubble. So it was really surprising to me to see him have such a lack of understanding of how bond pricing and interest rates work. Of course, interest rates are the mirror image of price. So the higher the price, the lower the interest rate. So if we do have a bond bubble, or say we have a crash, something like what happened here, 85 through 87, not a real crash, but a significant bear market, or maybe even here, if you have a significant bear market in the price of bonds, you're going to have a spike in interest rates. And people will say, well, that's good, then they pay more, the higher coupon on that. But what people don't understand is that if you have a tremendous drop in the price of bonds, which means you have a rise in interest rates, that means the bonds that are being issued now pay a much higher interest rate, and therefore the bonds that exist they go down in price because their interest rate is locked at a very low interest rate, so they become worth less because the interest rate can't compete with the interest rates that are coming out. So it was really shocking for me to find out that Sean Hannity doesn't understand the most basic concept of how bond markets trade, and I do believe we're in a bond bubble. So I wanted to segue a little bit about Corzine and some of the things that are coming out. As you know, Corzine it's come out that he was using Bill Clinton as a consultant, and apparently he was consulting regarding these euro bonds. As you know, Corzine apparently, or MF Global apparently, had a large position in the euro bonds, and we know that the interest rates basically blew out in a lot of those bonds. So that would be the same as being long this bond, for example, and then buying up in here and having the interest rates rise tremendously and essentially having your position cut in half. So Corzine apparently being advised by certain insiders, perhaps Clinton and others, telling him that the euro nations were going to be bailed out, and probably making a big bet that those bond yields would drop with the guarantee of backing coming in, and that would make it a great bet because, of course, if you had purchased those bonds at a very high interest rate and the market turned around and interest rates fell dramatically, then of course you're going to make a ton of money. As it turns out, exactly the opposite happened. He was buying a whole bunch, say, in here and in here and in here, and then of course the price crashed on those bonds, so he came and took somewhere like a 30, 40, or 50% haircut on the value of the bonds, and that obviously ended up wiping out MF Global and causing the bankruptcy that we've seen. So I wanted to tie that in to the physical market and why that's important. If you go to my blog, I'm trying to keep all the links that I have here that I use every day, so I can just click on them and go directly where I need to go in the commentary. Now I've put some links to the precious metal ones, and we'll go to Gainesville Coins. If you remember, I told you back in 2008, we'll pull up the silver chart, roughly in 2008, I was buying the morning of, I don't remember what the date was in October, but right around here, and I believe I was on APMEX site. And when the price hit about $8.50 on the silver, I did a number of purchases, including Buffalo's, I think, that I got for around $12.50. So that was about a $4 spread, which is very high percentage-wise. But of course, prices were moving so violently at that point. APMEX and Gainesville, their sites were locking up, so it was very difficult to lock in those prices. But I did lock in those prices and was able to buy at a significant discount, and recently was able to buy it at a significant discount with this spike down that we had here. The reason why I'm bringing this up is because with the MF Global situation, you'll recall that a lot of the traders were blown out of their positions and just lost their money because their accounts were frozen and they weren't able to liquidate, they weren't able to cover, they weren't able to do anything, so their accounts were frozen. Now, why is that important for the physical market? This is something that no one is discussing. If you go to this Gainesville site, or specifically if you go to APMEX, such as where I was at in 2008, this price at the very top that APMEX is quoting in, you can see they have the live prices here, with silver down about 47 cents. Now, if you go to some of these silver items that you can purchase, such as Silver Eagles here, you can see that APMEX has live quote prices. These will actually change based upon the current price of silver. So you can see that the Eagles are quoted at 34.26 right now, 500 or more on a bank wire, and that's probably down roughly what we were down today, so I think it was 47 cents. So before the market opened today, they were probably trading at about 34.66 or so before the market opened. Now, that's important because APMEX is giving you the opportunity to sort of trade the physical with the live prices, and that gives you a chance to lock in low prices if you think we've hit a bottom. Now, how is APMEX able to do that? Well, the way that APMEX and Gainesville and the others that actually quote those prices in a live format, the way they're able to do it is through their hedge book. So obviously, APMEX is only going to get these Silver Eagles, or if you're talking about the Perth product or Philharmonics or whatever product you're talking about, they're going to pay exactly what they paid in the past when they ordered them. Now, if we have a dramatic fall in the price of silver, and silver is $5 or $6 or $7 lower than what they paid for those coins, then how are they going to sell and make a profit? Are they going to close up shop and just refuse to sell at a price lower than what they purchased at? That would be a very damaging situation for their business because, of course, they're in the business of turning over precious metals. So the way they keep their market quotes live, as well as continue to trade even in a down market, is they can offset their risk through the futures market. So APMEX can go into the futures markets and buy puts or buy short futures contracts that offset their long position in these silver coins and lock in a price. And in that way, they can actually lower the price of the physical they're selling you. That's offset by a profit that they're making in the futures market. Now, why is that important? That's important because with this scandal and controversy with MF Global, it calls into question the very exchange itself and the safety of the exchange. Let's say, for example, that APMEX or Gainesville had an account with MF Global and they were using that account to hedge their physical silver book. Then obviously if their account is blown up, then they've taken a huge loss if they're selling physical below the price they purchased it at, and they can't offset that risk by taking a profit on their short position in the future. So this does have an impact on the physical market, and it does have an impact on the paper market. And I think ultimately why this was allowed to occur in the way that it did is to have the very impact that it's having. So I think that there are probably sinister forces at work here behind the scenes who are trying to weaken not only the paper markets for silver, but also the physical market for silver by preventing the physical precious metal dealers from offsetting their book and therefore making them not able to quote lower prices than where they purchased. So that's just an added issue that's going to be impacting people as this MF Global thing goes forward. Now, I wanted to touch upon some issues with the SLV. I've pulled up a copy of a statement. I believe this is part of their prospectus that they have put out, and it is a statement about the iShares SLV, and I think it's a little bit revealing, so we'll read a little bit of this. The iShares Silver Trust issues shares representing fractional undivided beneficial interests in its net assets. The assets of the trust consist primarily of silver held by the custodian on behalf of the trust. The objective of the trust is for the shares to reflect the price of silver owned by the trust less the trust's expenses and liabilities. The shares are listed and traded on the New York Stock Exchange under the symbol SLV. Market prices for the shares may be different from the net asset value per share. BlackRock Asset Management International is the sponsor of the trust. The Bank of New York Mellon is the trustee of the trust, and JP Morgan Chase London branch is the custodian of the trust. The trust is not an investment company registered under the Investment Company Act of 1940. The trust is not a commodity pool for purposes of the Commodity Exchange Act, and its sponsor is not subject to regulation by the Commodity Futures Trading Commission as a commodity pool operator or a commodity trading advisor. Silver owned by the trust will be held by the custodian in England, and other locations may be authorized in the future. The agreement between the trust and the custodian is governed by English law. Remember the scandal that's going on about rehypothecation and English laws regarding that, so that may impact this as well. The trust intends to issue shares on a continuous basis. The trust issues and redeems shares only in blocks of 50,000 or integral multiples thereof. A block of 50,000 shares is best called a basket. These transactions take place in exchange for silver. Only registered broker-dealers that become authorized participants by entering into a contract with the sponsor and a trustee may purchase or redeem baskets. Shares will be offered to the public from time to time at prices that will reflect the price of silver and the trading price of the shares on the New York Stock Exchange at the time of the offer. And they point out here that on October 3rd, 2011, the shares closed at New York Stock Exchange price $29.49. The London fix was $31.05. So you can see there's roughly a 50% difference on that price. Now, the issue at hand is what I asked in my last video is, how does the SLV make money? That is the question. Now, we know that the price of silver, the iShares are currently trading at $31.33. Now, they don't trade after market. We're looking at $31.71, but they've fallen significantly. I believe in my last video I pointed out that there was nearly $1 difference. So the question at hand is, how do they make a profit? Now, the explanations that came in when I raised the question were either, according to prospectus, they're selling off certain amounts of silver that they hold to pay for their expenses, or the price is being diluted. The question is, either the silver is being diluted or the price is being diluted. So if you look off into the future with, say, a near infinite time horizon, either the price of silver is going to continue up and eventually the price of the SLV is going to decay down to zero, or the price of silver is going to continue up and the price of the SLV will continue up with it, but the amount of silver in the trust will be less and less and less and less until there's absolutely no silver in the trust and it's unredeemable. So those are going to be your two options if that's actually how they're paying for the SLV, how they're making a profit. Either you're going to have the price of the SLV eventually decay all the way to zero, which means that it's worthless, or you're going to have the price continue on matching the price of silver, but there will end up being no silver in the SLV, and ultimately it will be worthless. So either way they pay for this, they are guaranteeing that eventually the trust will go bust because it will run out of silver, because it will be paying for its expenses and its fees and its all of its salaries and everything else out of the physical silver that they have, and that will make it worthless. So why anyone would invest in this thinking that it is a proxy for the price of silver when it is really just a guaranteed proxy for the decay down to zero, and a guarantee that it will be nothing but paper. It will be, in fact, no silver at all. So that's the best explanation I've been given. I think that's accurate. I think that's the reason why the price of the SLV does no longer reflects the market price of silver. And if that's the case, then it will just continue to decay into the future until ultimately it decays down to zero. So in my opinion, a real crazy thing to buy pieces of paper that say they're silver. That's one thing, such as Sprott's Trust, which actually trades at a premium and gives an account for how its costs are paid. Or, for example, James Turk's Gold Money, which actually charges you a nominal fee every year because you're actually paying for the storage of real silver. So those aren't what I'm talking about. Of course, I prefer everyone not have their silver held offshore or held anywhere else, but have it in their hand. But second best would be Sprott or Turk. Absolute worst would be the SLV, and I do not recommend. Although I don't make any investment recommendations, I would not myself invest in the SLV, and I certainly would not recommend that anybody else invest in it either. Now, the last point I want to take you to is the Gainesville site where we were before, and we'll just jump back to the home page and then head off to Gainesville. I've been doing some research here with the price falling, and if you remember my numismatics top 5, they, again, I had to readdress the question about how they were being understood to be investment advice as to what to buy now. It's not at all the case. They were meant to be examples of how sometimes in the past numismatic plays ended up being value plays, and I want to show you some of those on Gainesville right now that have come up. Sorry, I've got to pause here for a second. My battery has decided that it wants to die, so we'll get this charging here. So let's jump over to Gainesville, and the way you can search this is if you choose silver as your search option, we're getting quite the delay here. Looks like their site's really slow. Maybe a bunch of people have decided to jump on and buy silver tonight. So it doesn't look like they're going to let us on right now. Let's try to jump over to APMEX instead while Gainesville is loading. Actually, it was going to be Provident Metals. I've linked those 3 on my site. And with Provident Metals, you can search based upon silver, and then what I do is I will choose 1 ounce because that's my favorite, and then you can select the number of pages, and I usually choose all. So I went through these, and of course a lot of them are sold out. There is the Cougar, which I don't really like the coin. A lot of people don't like the coin, but it is a wildlife series. It is from the Royal Canadian Mint. It is 4 9s, and so if you like the coin and you think a lot of people are going to like the coin, this may be a really good buy here, especially at 36. I just don't particularly personally like the coin. Now, the one that I saw earlier today that I think is probably, here's the 2007 Koala at $76. We covered that before. And there's just a ton of eagles. And like I said before, it's not that I don't like eagles, it's just that eagles never change. So they're always the same pattern every year. And there's a lot of old kookaburras. Now here's the Canadian Timberwolf. This one's out of stock, and that's at $48.79. It's still out of stock. Now here is the Canadian Grizzly, and I think this is going to be, this is my guess, just my opinion, I think this is going to be a big numismatic play. So yes, you are talking about roughly $10 above spot. That's a pretty steep price, but I do think that this is going to be a big numismatic play in the future. It doesn't look like they give you numbers like APMEX, but it looks like they're available. They're not out of stock, and it's a great coin. So I don't have the money to buy right now, but if I were buying right now, I would probably try to grab a bunch of these on a dip. So let's see if the Gainesville site has loaded. And they have. So I usually go with all countries, and then I choose silver and 1 ounce. And this time I'm going to choose new releases, new arrivals. Now if you remember, I had been recommending the Taku as one that I really thought that was going to be a numismatic play in the future. I believe those are sold out now. You can see our 2007, they're trying to get $115 for that koala, so that was really a winner. Here's the tiger. That was my second one, and that's $99. They sold out of those kookaburras. So there's really not a lot available there. That is as far as new arrivals. That's not new coins, but that's just stuff they just got into stock. So let's go and look at 2011 1-ounce releases. And it looks like they shut down on us. So there's the Taku, and that is out of stock. And the Kookaburra is out of stock. You can still get the Philharmonics. There's the Rabbit. That's one I really don't like that much. So there really isn't that much available. So I would say out of what's available right now, my favorite is going to be the Grizzly. Now, the other one that I did notice on APMEX that is out, that just came in, if you remember, when silver dipped to 26 that night, I had mentioned that I had purchased the African Wildlife Series. I did notice when I was on the site today, they do have the 2012 African Wildlife Series in. They've got about 3,700 of those. The 2011s, the ones that I bought, they've only got about 1,900 left. If you remember, they got in 6,000 or 7,000. So those are going pretty fast. So here's the new 2012. It's a nice coin. I can't really get the picture any closer in than this. I don't know if I like the pattern on this one better than the 2011, but it's still a very nice coin. So for the price of $35.77, that's a little bit higher than the 2011, but not that much higher. So I would say at this point, my two favorites are going to be the Grizzly at Provident and this 2012 Elephant at APMEX. So back to the main point. I think that there's going to come a time here pretty soon that with the MF Global situation, we're going to see a weakening in the paper markets to the point where people cannot use them anymore. I think that's probably the intent behind it, and that is going to have an impact on the physical. You're probably going to end up not being able to buy the dips as you were in the past because the precious metal dealers like APMEX and Gainesville aren't going to be able to sell below cost if they're not able to offset their risk in the futures market. And we'll talk to you next time.